Okay, official welcome to bonus tribe coaching with Hima live. And today's Wednesday, March 15th, 4:30 p.m. Eastern. Can you believe we only have 2 weeks left in the quarter? And then we're 25% done with 2023. I can't believe it. I think it's wild. So what do we do in this session? And what do we get to? Where we're going to focus on education. Okay. Because just like I say in many of the trainings I have with you, I don't know your account size. I don't know what you're trading. I don't know how much you're risking. So I'm here to educate. This is not financial advice. You're going to make any trades at your own risk. So those of you here live, or if you're watching this in a place where you can comment, please type a D for the word disclosure, that you understand the risks involved with trading. You're ready to focus on your learning here. Okay. The second letter in the word education. Okay. Fantastic. Appreciate it. So as I mentioned before, for those of you who are a little bit earlier and kind of checking out the scene, there are specific ways that you can ask me questions that let me best help you. And again, if you're brand new, I'm going to take you right through it. And what we do in a standard monthly group coaching live, which is something my members get to benefit from every month, is I start off with a little bit of the state of the markets, kind of where I'm seeing things, and it also gives you all a moment to compile your questions, okay? So for the question asking format, just listen close before you type anything. I'll give you the little gunshot green signal when you can type your questions, and there's no rush. We will get through them, all right? So if you have a particular ticker you want to look at, a particular market, then what I ask that you do is that before you hit enter on that, you go ahead and you type in this information that's here. So the first thing I want you to do is type in the ticker symbol. Ideally, you could give it to me in its kind of standard form so that when I put on TradeStation, it's not hard to find. And then give me your initial analysis on the ticker. So let me know what it is that you are thinking about it, what you are seeing, okay? If you give me a ticker and there's no analysis around it, I'm going to skip to somebody else who gave me a more thorough question, okay? Again, do these things before you hit enter. So type your ticker, then before you hit enter, give me in another sentence or phrase your initial analysis on it with your price, momentum, timing, whatever you're using from your HimaReddy trifecta. You can even let me know if you have a trade on, but please keep it simple and straightforward, okay? Like let me know where you entered, where you see it going, where your protective stop is, just the basics. And if you have any specific questions like, hey, I would like to know if, you know, what the forecasting is saying about this or the momentum, you can do that. All right. So again, you need to type in your ticker with a question. I'm very strict about this, and it's for your own good. Guys, we don't go in the grocery store and yell food, right? And expect somebody to come running and help us. We go in there, we have a list, we're very specific about what we want. And as you need to find things, you'll get help along the way. So I would like you to rephrase your questions. Those of you who just typed plain old tickers here, just give me something. Give me a piece of analysis you're looking at. Give me an observation you made. It doesn't have to be a whole big thing, okay? That will help me best help you. And here are some examples of questions that were asked in the past that were done in this way so that I could help you all by taking any individual person's question and turning it into a lesson for everyone, okay? So I'm going to take a moment here. I'm going to pause, and I'm going to collect on my end the symbols that you all are giving me. And then we're going to start diving in, looking at some of the markets I've been observing, especially these past few days, and looking at your questions. Now, how are you going to know if my radar even picked up your question? I will tell you. So we are truly here live. This is not a past event that I'm pretending to be here. Okay, it's March 15th, 4:36 p.m. Eastern. And so I see questions that are some individual tickers. I will grab those here, but I'm not going to start with those. I was going to start with the ones that were asked the way I requested. So Scott, I see your question about MES. Jerry, I see your question about the Qs. Bill, I see your question about PFE. All right. John, I see your question about RUM. And Hader or Hyder, I'm not sure what your question is. Is USA the ticker? I'm just not familiar with that, like off of my top of my head. So go ahead and clarify for me. Otherwise, I'll come back. Okay. CF, I see your question about Oxy. And for anybody who asks more than one question, just keep in mind that I'll circle back to you after I make sure I get everybody's first questions. Okay. so that it's kind of fair. We all have one go around. All right, awesome. So let's get to it. So what I have is my TradeStation set up. And what I'm going to be reflecting on is techniques, methods, lessons from anything here in the HimaReddy portal, okay? So really what I want to get to is the basics, because I realize that this is an all tribe coaching, right? Some of you may have my courses and products. Some of you may not have them yet. I'm not here to sell you something specific. This is truly like Ask Anna on Friday. I was like, Anna, like, I think the tribe must be freaking out a little bit. I'm freaking out a little bit. Like, by all the stuff going on, I need to dial in and look at it close. Shall we do a session with them? There's no specific offer I'm going to have for you at the end. I'm just relieving that pressure off of you, okay? I don't have like a checkout page at the end of this 50 minutes, none of that. This is just Q&A and letting you get to see what I do. However, these are my products, so I will mention them. And if you have further questions about how to dig into them, then please ask, okay? So is that a fair trade, guys? I did an extra bonus session for you. I'll mention my products, but we're here just to learn. Type a Y in the chat if you're cool with that. Okay, awesome. So I see the questions that came through, like I said, and what I'm going to do is I'm going to now pull up a TradeStation panel. So those of you who have not seen me navigate on TradeStation, you're going to see it unfold now. All right. So what I have here are a bunch of markets and tickers I've been looking at. I'm going to just spend a couple minutes here kind of like getting my bearings on the market, and then I'll go through the 5 questions that came in, and then I'll call on you when I'm ready for more questions, okay? So Deb, if you could just hold on to that one, because I like getting through like a small bunch and then coming back around, that'd be awesome. Okay. Here's where we're at. This bank, if you were not paying attention to the news the past few days, I feel like it's very hard to not know these things are going on, but let's just give you the benefit of the doubt. Okay, so Silicon Valley Bank, ticker SIVB, they went down on Friday. I did a very thorough video about my reasoning as to what happened with that bank, so you can check that out in your Tri portal. And then another regional bank, Signature Bank, they're more crypto focused. They also had issues starting Monday. And then Credit Suisse over in Europe starts tanking last night into this morning, okay? Now, these banks have actual things they were doing that allow them to be in these positions, okay? It's not like it all just fell out from under them. But what I do think this is a little sign of is that there's going to possibly be more unrest in the banking sector. And when you look at the S&P 500, this is the XLF ticker, okay? So State Street has all these sector ETFs, and XLF is where the financials, the banks are represented. So I think there's a little bit more trouble ahead. So I'm not going to go through an analysis of every single one of these charts now, because I'd rather spend this time answering your guys' questions, okay? But in a full-fledged monthly group coaching live, I would spend probably a good 10 minutes giving you my state of the markets. I just want to make that clear, okay? So I'm seeing a few questions that are continuing coming. Guys, at this point, just hold your questions until I get through the 5 tickers that were asked, and I'll let you know when I'm ready to take more questions. So I'm going to go ahead and just fast forward and jump down here. I might refer back to these other markets, but I'm going to type in the ticker symbols that came through, okay? So we have Scott asked me about MES. Again, we have Qs for Jerry. We have PFE for Bill. We have RUM for John, and we have OXY for CF. Okay. So now begins the Ask Hima portion of this session, where I'm going to go through these charts. And at times, guys, I might call on you. I might turn it into a pop quiz or a little lesson. So I need to know everybody's ready to go here. So type a Y in the chat if you're ready to watch me analyze these markets and possibly turn it into a little trading lesson for you. Speaking too fast. Okay, wonderful. Now, before we get into this, if I mention resources or I mention links, I want you to stay on top of the fact that today, for the first time, I'm testing something cool and new, where in the HimaReddy portal, okay? So you would go to himareddy.com/portal. That takes you to this master portal. You would scroll all the way down and you have access. It's a free product portal, the HimaReddy Tribe, okay? So when you hit access now over here, it will open up to the inside of the Trading Tribe portal. Then you go over to the Helpful Hima tab in the blue submenu. And when you do that, it will provide you my Helpful Hima page. And here you'll see there is an embedded section and there's notes in here that you can take a look at that are going to be things I'm literally populating live. Okay, so I'm going to do this live. And so you're going to see me type in there. It's going to refresh a few seconds later. All right. So everybody can grab whatever resources I'm mentioning here. You can copy and paste from this file. It's all yours to act on. Okay, so now that we've got that squared away, let's dive in. So the first question was from Scott about MES. He pointed out there was a range today, but soon to move up. Well, there's a lot more to that story. So the MES is the micro E-mini S&P futures. Who do we have here that trades the MES? Type a 1 for me in the chat. So I know this is a smaller market that's easier to trade if you're starting with futures as opposed to the larger ES. Okay, wow, we have lots of MES traders here. Okay, so what I'm going to do is just kind of share my analysis by talking about what I'm seeing in the big ES and then transposing it over. Okay, not every single analysis line, but the general idea. So the broad market as per the E-mini S&P 500, which tracks to the big S&P, is showing that we returned to this price probe. So this December 23rd range, and we almost came all the way to the bottom of it and have stabilized, okay? So that is at 3822. So the equivalent of that is on the MES, this low at 3820.5, okay? So the 3820.5 in the MES is the most important level I see that we're near. The thing is, if we take this down a time frame, so first let me go to the ES, regular ES daily, okay? So guys, this morning, I saw this likelihood developing of this forecast. I need today and tomorrow to kind of unfold before I'm going to suggest trading in that direction, because there's a lot of flux right now. But when you look at this move on an intraday chart, so if I take my ES, right, the bigger thing than the MES, and I go to a 60-minute chart, here's what I saw when it comes to the GAN drives, okay? So I'm going to kind of trace these out, even though I have them drawn. So I saw we had this one drive lower that broke up into 3 pieces, this drive lower, and then this drive lower. And then we had a massive sort of sideways range that started to see weakness, a breakdown from it, when the Credit Suisse news started coming in from across the pond and fueling the pre-market weakness this morning. Guys, type a Y in the chat if you're following me. This is the 60-minute chart of the big ES, and then we'll look at it in the MES. Okay. And I'm breaking down the drives here. All right. So with these drives, I'm a little concerned that right now we have finished one bigger drive and now we're in the beginning of another one lower. I don't have a crystal ball. I don't know for sure yet, but that's sort of the possibility here. So Scott, bringing this back to your MES, if we wanted to transpose that cycle that I had drawn on the daily chart, okay? So loss forecasting students, this is your moment to shine, okay? This is a little bit of an advanced question, but I'm just going to put it to you, okay? If you were helping Scott do a forecast on the MES, which of these levels would you use? Okay. 1, 2, 3, 4, 5. Okay. I made it not super complicated, but I want you to tell me. So those of you who have loss forecast and trading system education, you'll be able to answer this. Okay. So while you get those answers in, remember, there were different drives that I pointed to on the MES, and I had said that they're all coming to a head with consolidation here and us sort of starting over. So I would be looking at, if you were comparing to the one I just said, it would be this huge move. Okay, this is more of an advanced forecast. And I even have to add more space on the chart. So let me do that here. All right, and anchor that to this low here. And what this does is if we break down, Scott, from this current stuff, then we could be declining into March 21st. So that's a week from today or a week from yesterday, Tuesday, to about the 3690 level. Everybody see that? Whether you came up with the same forecast or not, I just want you to understand my logic behind it, okay? This is not happening yet. Do not trade this. But if this resolves to the downside, then this is what I see is likely. So Scott, does that help you out? Please let me know in the chat. Okay, awesome. Super. Okay, so I've got that one question answered for you all, and now I'm going to move along, and then I'll let you know when I'm ready for the next round, okay? So the only questions I'm answering right now are in this little ticker list here. Now let's go to the Qs. Now I did forget to set my little eyeball timer, so I'm going to take a little stretch with you all in a minute. You'll see what I mean. Okay, so here I'm going to shift this back to the daily chart, and here we have the Qs. Now, Jerry says he's looking to go short at the open tomorrow. So, I'm not really sure why you're looking to go short. Like, I don't know what evidence you have that this is wanting to turn lower, because the Qs, like the NASDAQ and tech markets, are a little bit stronger than the regular S&P right now. The chart shows it. So I'm not sure what your evidence is to go short, if you're kind of expecting there to be some weakness turn up, but I don't really see a good place to go short here based on any evidence. I don't see anything happening just yet that suggests we're going to go lower. What I do see is that back here, we had a nice lift off after bull bear RSI face off, okay, in the no man's land space. So it's not one of the 4 distinct zones, but it's a no man's land. And in case you guys don't know what I'm talking about when I say bull bear RSI face off, like I said, I'm kind of sticking to basics here today. I printed it out my own copy. Who recognizes this? This is the bull bear RSI face off ebook. Type a 1 in the chat if you've ever purchased this from me, downloaded it from me, ideally read it. Okay, this is it. I printed it out today. It's 27 odd pages. I reread it today because I was like, you know what? I really, really want to dial into the basics. And this helped me. And on the last page is a cheat sheet about where you see certain RSI power zones patterns and what it tells you about in that zone. So let's get my little cheat sheet ready, my staple. Okay, here we go. So back here, we had a bull bear RSI face off. Not really a clean, beautiful one, but the idea of it was there. It's a little bit more advanced, the one that unfolded. But the idea is this was not in any of the distinct zones. So this is part of why I'm not taking this rise as anything too serious. I do see, Jerry, how there could be room to turn lower in the grand scheme of things, but not just yet, especially with all this bank stuff going on. I don't know how long all y'all have been trading, how long you've been involved with the markets, but the other banking crises we've had, not just 2008, but ones before that, okay, starting in like the early 1980s when I was a toddler, okay? What did the banks say when other banks were falling around them? We're good. We don't need help. We're fine. Thank you. Move along. So just because the banks say, oh, we got it, everything's going to be fine, or unnamed Fed friar people walk around and say, everything's fine, don't freak out. I don't trust that, okay? So I might sound like a skeptic here, but I'm not going to trust that. I'm going to look at the people who have the power. So I'm going to look at the Fed. I'm going to look at Jay Powell. I'm going to look at the current administration. I'm going to see what they do. And remember that when the banks say, oh, we're good, we don't need help, it doesn't necessarily mean that's the case. So I'm bringing this up because I just expect it to be a very choppy time. And I'm not recommending that anybody trade the small moves here. It's better just not trade this week if you're unsure about how things are going. So guys, type a Y in the chat if you understand. It's up to you whether you follow that advice or not. But I'm telling you, there are some major shifts happening right now. Like, look back to February and now, right? Wasn't it just late February or even just a week ago? I can't even remember anymore. That Jay Powell was sitting on Capitol Hill getting grilled, and he was all like totally aggressive about rate hikes and stuff. And then look at what happened, right? Silicon Valley Bank, Credit Suisse. Even though the jobs data and the PPI and the CPI are all saying that, you know, it might be fine to have another rate hike, these other factors are making signs of recession even more evident. And so that's what I'm saying. I'm not saying it's time to freak out. I'm saying it's time to really pay attention to what's going on and don't trade just to trade. If you trade just to trade, you could really have your butt handed to you at some juncture here. So there, I don't see a reason to short the Qs yet. I'm not going to speak further to that recommendation. We have to see what happens tomorrow. There is resistance at this level right here. And so that could be where it is, but it's just not there yet. Okay. Got it. So the material, this book that I was referring to, this is just like the first thing most people come to me with. So I decided, let me go back to that. Let me reread my own work. And yeah, everything still stood. So this bull bear RSI face-off is in the RSI power zone system at the HimaReddy portal. Okay, cool. So it's time for an eyeball break. And we'll all do that really quick together. Okay, so I wear these glasses to help protect my eyes from the screen glare. And I use this cube timer to make a habit to get up and stretch and pull away from the computer. So you guys ready for a stretch? You can do this with me, okay? I just looked down. I'm wearing real pants, so we're all safe. Okay, so, and I have my wrist brace on. That's a whole other story. I have very delicate wrists, broke them a lot playing tennis when I was young, so I never use a computer mouse without a brace. But let's just all take a quick stretch and then we're gonna come back to the screen, okay? So I'm standing up safely, okay? So everybody, if you are sitting down, I recommend stand up carefully. The doctor says it's okay. If you're standing, you could sit down. And what I'm doing, and you're just gonna see me back here, okay? I'm gonna look out the window because I wanna reset my eyeballs. I'm going to look at something far away. So I'm looking at my neighbor's window. And that way I have that reset on my eyeballs. This is important for us to do because when we look at the screens all the time, we are looking at things usually, a foot to two in front of us. And that's what creates eye problems and strain. If you make a habit of taking an eyeball break, I do about every 25 to 30 minutes, massive improvement in your ability to endure long computer work if you need to do it or want to do it, okay? So I'm just looking away, resetting the eyes. Sometimes I use a little, clean fingers for a little massaging or whatever. Roll the shoulders, stretch out a little bit, and then come back here. All right, so now I'm gonna put my glasses back on and put my timer back on, okay? So now we continue. We're still gonna go here. So we have John who asked about RUM. Before that, oh, Bill, sorry. Bill asked about PFE. So we're up to that now. And what you'll see here is that, oh, this is Pfizer, okay. He said long at 45, target 55 by June 16th. Okay, so if you're long at 45, we're gonna just throw a green line on there so that we can all capture that. All right, and your goal is to get out by 55, June 16th. So I'm just kind of mapping out your trade. Okay, Bill? And June 16th is out here. Okay. So I'm not totally sure what reasons you had to go long here. I do see that we were still above this key swing low on the charts and back at kind of recent oversold levels. So the RSI power zones takes the traditional RSI and applies these special zones so that you can deal with it differently in bull and bear markets. Who already uses RSI power zones? Type Y in the chat. Should be probably most of you because it's kind of the first thing a lot of folks come to me to use, to learn, to master. Okay, cool. So I can see, Bill, how at this time you were like, oh, we're back at recent oversold levels and back near long-term lows. The thing is, the price was still in a downtrend. So for that purpose, right, we were still making lower highs and lower lows when you bought whenever one of these days back here. Okay, then I'm not quite sure why you were still holding on. I guess you didn't have a clear protective stop order. We are now beneath this October low. So at this point, I don't know how long you're willing to wait for things to get up to 55. It could take some time. And I don't know what you're willing to risk, like what your max loss is on the trade. One thing we have that's happening that's in your favor is happening right here. So pop quiz for everyone who's got their RSI power zones in motion, whether you have my bull bear ebook, whether you've gone full force in the 4 zones RSI, can you all tell me the name of this setup in the chat where I'm highlighting here with the yellow? There's 2 parts to the name. It's not just one thing. You got to name it for what it is. Remember, the cheat sheet reminds you, it's not just the pattern, it's also the location. There's very specific language here, guys. And that part's important to get practice with because that's what will help you quickly have your strategy. Okay, so this one is a bullish divergence in the bear support power zone. So what happens when you have a bullish divergence in the bear support power zone? How is that defined and all that? That I teach, but what I want to talk about is a strategy here. So number 1, exit shorts. Number 2, tighten up stops on short positions. But the third, the aggressive thing would be to go long. So here, I would not add to the position, Bill. I would not, do any dollar cost averaging. Your position is what it is. I do think that this setup here gives a little bit of hope that there may be more recovery, but the price action needs to get above 41.26 to have a chance to get back to your break even anytime soon. Okay. So I'd monitor that level, and then it's up to you. How long do you want to absorb the paper loss of this trade? Does that help you out, Bill? Does everyone see that? Do you get a reminder of the offensive versus defensive approaches to these face-offs? Okay. Like I said, we're not getting super complicated here today. I need a reset. You need a reset. We need to just remember the basics. Okay. All right. We're almost done with our 5 list. So don't just type your new question yet. I will let you know when I'm ready, but let's just go through here. So we have RUM that John asked about. He said, holding shares, reporting March 30th, and I think it'll outperform. All right. Since I'm not sure where you're long from, what your exact position is, I'm just going to do a little overview of this ticker. And I'm going to start on the weekly chart because I'm not super familiar with it. Okay. So Rumble Inc. So this looks like a newer market, recent IPO, relatively speaking, past couple of years. And it's been in a very volatile swings lower off of this high from September of 2022. Now, on the weekly chart, the most recent decline is off of the February 3rd high. And so far, let's see how much of the gains it's gotten back. Yeah, over half the gains it's recouped. Okay, so now I'm going to go to a daily chart. And the biggest thing I see in the daily chart, the biggest thing I see right now is in place since here. So what is it that we call when the RSI power zones is living like this for the most part? There's terminology I use for this, guys. I believe it's in the advanced RSI power zone system, but today, I'm keeping this kind of focus on momentum. So you may have heard me say in other areas, but it's red zone domination. Okay. So red zone domination tells me, okay, this market, even though it's had a bit of recovery attempts, the bears are still putting their forces in here. Okay. Also, I want to look at this most recent price spike. So not the one that's closest to the recent price action, but the one that is also on the weekly chart. So this guy back here. And look at how beautifully, guys, the low of that price spike was 10.06 and the market came up to 10.04 just last week and is moving lower. Do you guys see that? Okay. So now I'm going to bring in a little mini pop quiz on forecasting so that we can come up with a forecast to help John with RUM. Okay. I know you said it's reporting March 30th and you think it'll outperform. Cool. The thing is, depending on where it's trading at that time, whatever it outperforms as may or may not get back to your average cost of shares that you got. So what would you use to make a forecast for RUM now? Ready? My loss forecasting students. Okay. 1, 2, 3, 4, 5, 6. I made this one a little bit harder. I'm looking at who's here. Ooh, Ben. Ben is loss forecasting student. He can answer this. Danny is. I'm just looking at your names, some of the ones that I know and see regularly. Thank you for being here as always. Julie, you can give me your guess. Khalid, you are the OG. You were one of the earliest people to learn loss forecasting. So I'd like to see your guess as well. Yeah, y'all didn't think I was going to call on you, huh? I have a list of names here. Okay. Cool. I'll save more name picking for later. All right. So I made this one a little harder. And like I was telling a student the other day in a one-on-one session, guys, when it comes to forecasting, it's not really that there's wrong answers, okay? It's that the cycles you choose need to be providing you the strategic value. So if I look at the move from 2 down to 5 as a couple different drives, right? 1, 2, 3, then right now 2 to 6 is basically a return to the bear resistance power zone. And then you could project that from 5. So that's the one that I would naturally do. And whoa, check it out. I wasn't even trying to do that. It's super close to the earnings date. Do you see that, John? Whether you know how to do loss forecasting yet or not, do you see how your earnings release date and my forecast are pointing to like a high energy time in the market? Guys, if you see that, type of Y in the chat. And thank you for participating, Tom and Mark and Julie and Sybil and Danny and everybody else. Okay, so there's a decent chance that we continue to edge lower here, probably more towards the $7 area. Again, I'm not sure where you're long from, so I'll leave it at that. Okay. John, let me know if that answers your question or gives you some assistance. And I'm going to move on to the last one I have here, and then I'll let you know when I'm ready to take more requests, okay? So we're going to go through Oxy here, Occidental Petro Corp. Okay, energy stock. So this looks a lot like how the oil charts look like right now. So oil has been tanking. Guys, oil falling like this, there's 2 important things to remember from this. One, if you look at the CPI calculations, okay, the inflation metric that is very telling these days, inflation looks like it's stabilizing or coming down, but really it's because food prices are going slightly lower and energy prices have dropped a lot lower, okay? The other parts of inflation metrics that are not energy and not food, they're kind of the same. They've been the same for like the past 6 to 8 months. I made a video where I showed this on a graphic and I put it on my YouTube last night. I didn't send an email about it because I just made it super fast. I'm going to see if I can find it and bring your attention to it, okay? So I want you to keep that in mind when you're looking at any sort of inflation data, that what is happening with energy is feeding into that. So here it is. Okay, that's loud, but here, okay, I just want to show you, this is the video and this is the graph I referred to. So if you didn't see that, you can go check it out on my YouTube channel. So coming back to this OXY, because we're talking about an energy stock. Alexa thinks I'm talking to her. Alexa, I'm in group coaching. Okay. She shut up now. Okay. So here we go. This looks a lot like oil in terms of how it's falling. CF says Oxy got in 313. So you got long a couple days ago at 57.51. Exit goal 62.50. Okay, so short-term kind of trade. Got stopped out today at market open. Is it a good time to get back in or not? I don't see any sign here that this move lower is stalling anytime soon. I don't see a bull bear RSI face-off. I don't see the return to a specific zone. I don't think there's a forecast that will have come into fruition here, but this is the one that I would draw, and we're getting there in time, but we have not gotten there in price. So this time could be telling us that we're ready for oil to stabilize and therefore Oxy to stabilize CF. But this alone isn't going to give me everything. So I'm going to go to an intraday chart. Guys, would that be cool? Can we go from the daily to like a 60-minute chart? Type in Y in the chat. I just want to know how many swing traders here I have versus day traders in the mix. Okay, thanks, Bradley. All right, so I'm going to make the switch quick, and I'm not adjusting all my lines in business. We're just going to look at it together. So even here, 32.33 is the trough here. 31.60 is the trough here. Wait, sorry. 29.65 is the RSI trough here, which is lower than 31.60. So right here, we don't have a bull bear RSI face-off. It looks really close, but that's why you have to always look at the exact values, okay? So nothing here is really that exciting to me. I think there's a decent chance of a little bounce here, because when we look at the short-term forecasts, we could say, all right, well, we've got this recovery that's in place, and maybe it takes us into about 60 bucks by tomorrow. But CF, I don't know what your longer term, bigger picture is. If you're more of a swing trader, then you might need a little bit more evidence before going long now. This bounce could happen, but that's a counter trend bounce to trade. Does that help you out? And if you have follow-up questions, guys, on your tickers, just let me know. But notice I am checking to see if I answered you before I move on. Okay, cool. All right, so I think I am ready to take more questions if you have them. Meanwhile, as you populate this, so remember, I'll give you a little reminder here. This is how we ask questions here. Okay, so I'll bring it back on the screen. I want you to put your ticker in, and before you hit enter, I want you to give me something. Give me a story. Give me something going on, and then we can build off of that, okay? And drop as many as you guys want now. I will do my best to power through them all. And in the meantime, while you're putting your questions in, I'm going to show you some of the other markets I'm watching. Oops, that's just my shock picks windows. Some of the other markets I'm going to keep tabs on in the next bit here because of everything going on. So, as I said in my story about SVB, okay, so SIVB is the ticker of Silicon Valley Bank. Part of what was a big problem for them is how they invested in their timetable of those returns versus the liquidity they had for their depositors, right? Like they had these investments that weren't producing the returns to meet the liquidity demands. So one of the things that they invested in was the 10-year. And you can look at that. When I say the 10-year, I mean US 10-year bonds, right? One of the safest investments in the world. And when you look at the actual bond market, the root ticker is TY, and in TradeStation, you put an @ symbol that gives you a continuous contract chart. So this is the actual bond. This is the actual loan the person gives to the US government, right? And then there's a coupon, an interest payment that they give you. That's the whole point of buying bonds, right? You get the interest payment. The interest payment in those rates is essentially moving in the opposite direction of the bond price. So here, this is a index TYX.X that is 10 times the 10-year rate. So that's why the number here is like 36.87 when the actual coupon is 3.687, something like that, okay? I'm watching this close because the fixed income markets are also starting to hint that a recession is coming. And I'm going to look at one long end and one short end. And really, I want to look at the 2s, 10s. So this is talking fixed income talk, okay, back from my Wall Street days. It is a very weird environment that 2s are performing or have been performing as well as they have. Like, people don't go to 2-year bonds to like make their money, okay? Now, I've been trying to find a good proxy for the 2-year yield and TradeStation symbol. I'm having a hard time. Like, I got this one for the 10-year. I got this one for the 30-year. I got this one for the 5-year for the belly of the curve, but I don't have a good 2-year one. So I'm working on that. But I can look at the 2-year note futures, okay? So I can understand, all right, well, whatever the coupon's doing is essentially the opposite of this. So I'm just letting you know, I'm going to start keeping closer tabs on this, and you may see me report a little bit more fixed income updates. Would that be helpful to you guys if I shared those in like chart of the week or skinny dip and stuff, what I'm seeing in the fixed income market? Because that to me is going to be very telling about when a recession happens. I mean, I'm pretty convinced there's going to be a recession. It's just a matter of the magnitude and the timing. Okay, cool. So I've seen some of you have asked some questions. So let me put them into my little list here. So Stephen, I see your question about the SPY. Rich, I see your question about FTI. Bill, I see your question about H. I think it's just ticker H. Okay. And if you have any other questions, guys, let me know. Okay, Kirti, I see your question about the SPY. So 2 SPY questions. So I'll probably answer those kind of in one. All right, so that's 4 tickers. So we'll put those all together and keep it moving. All right. Guys, I usually wait to the end to see if there's a golden nugget or a key takeaway you've had, but we're almost 45 minutes in and I would love to start knowing now. So we're not ending anytime soon, but drop for me in the chat any key takeaways, golden nuggets, reminders you're getting, refreshers you're getting, because that helps me know if what I'm teaching and what I'm sharing is actually providing that value back to you. Okay. So feel free to share as you come up with them. And I'll make sure Anna captures them in the chat too. All right. So I'm going to start with I'm going to continue on here and we're going to go to the SPY. We're going to go to the, oops, not soy. That's funny. We're going to go to the SPY. We're going to go to the FTI ticker and we're going to go to H. All right. So on the SPY, let's come here and look. So we did talk about the micro ES before, and we talked about the E-mini S&P, but the SPY itself is obviously very highly followed. I know lots of you trade the SPY. So I have 2 questions here. So one is Steve saying he's got SPY 393 call. What resistance between current levels and 394? Okay, so I'm just going to throw a line down on 394. And we'll look at those together. And then Kirti had a question, SPY open +2 strike call ODTE option if it gaps up tomorrow above 391. All right, let's keep it simple, guys. I'm just going to focus on my analysis of the underlying here. And it's going to follow a lot like what I said earlier about the MES and the ES. Where we are now, we are at a key area on the SPY that's returned to this price probe. Actually, it's more of a price low. It's not a strict price probe. Price probe is a type of resistance support area in the 4 zones RSI that I teach. Price low, bar low, swing low are kind of through all my courses. So when I say price low, I mean with a capital P, because I have 3 types. I have a bar, price, and swing. Okay. And this is pretty straightforward. So I'll just give you a little mini lesson here. When I say a bar low, I'm talking about like the low of the individual bar. So this right here, that's a bar low. Guys, type a line in the chat if you follow. I'm getting you a little mini lesson now so everyone can follow my lingo. Okay. Bar low is literally just the low of any one of these individual bars. Okay. Price low is a situation where you have a bar with a lower low, and then a bar with a higher low. So it's the relationship of these 2 to this that makes it that. So here is a price low. Here is a price low. Here is a price low. But guess what? Also, here is a price low. So not all price lows turn into major turning points. That's why swing lows are my favorite, because swing lows have the most data because they require 2 bars, a 3rd bar lower, and then bars higher. And these have to all be going in this direction, and these have to all be going in that direction. Okay. So when you have that, you have a little bit more oomph, a little bit more power to the move. So there's not going to be as many of them. And this goes for high or low. So here would be a swing high. Okay. So you can see we had a swing high back here. It doesn't mean that there aren't other bars nearby. I'm just talking about the formation and the way that those bars look. Here was a swing high. Okay. And that kind of like show the distribution going on here. Okay, great. So now that we just kind of did that refresher, bar, swing, and price. Now, if I say those, everybody who's here live and watching the recording, if we process that successfully, should be able to follow what I'm saying. So we have a price low that's formed after returning to a major price low back in December. The current market volatility and news regarding the banks, first Silicon Valley Bank. It's all S's, that's interesting. Silicon Valley Bank, then Signature Bank, then over in Europe, Credit Suisse, okay? All of this is having banks and larger powers step in. And we will see if, I mean, the ECB has a meeting tomorrow, okay? So the ECB is like Europe's Fed, if you will, for anybody hearing that for the first time. And as I have in my helpful Hima document that you can follow along in the portal, here is the calendar for ECB meetings, okay? And their next meeting, remember, they have the dates where the month is in the middle, is look, March 16th, that is tomorrow. So I'm not sure of the news in the past couple hours because I was just getting ready for our session here, but given everything going on with Credit Suisse, it's very unlikely that they would hike rates. I mean, that would just be really wild if they did, because it'd kind of be like another shock in a shock situation. But that's another reason why I'm kind of just waiting out here on the SPY, on the E-mini, on the S&P. There's lots happening right now this week. And with this issue today with Credit Suisse, we want to find out now if this is a true, like, across the Atlantic Ocean systemic bank issue, which unfortunately it looks like it is, or if it's not, if we've seen the worst of it. Okay. I don't want to pretend like I can predict the future. I can't. I'm just reading and studying and absorbing and letting the charts tell me. So the charts are telling me now that investors feel, okay, the bank stuff is like calming down, right? It's happening, but somebody's stepping in and saving the day, or that the data, the retail sales, the PPI and everything else are showing that what the Fed did of hiking rates is accomplished, and they don't need to hike rates anymore. Like when you look at the broad market, guys, whether it's the SPY or the S&P E-mini or the MES, remember, the investors in here, it's weird, but this is how I think of it. It's like a group of kids who have been home from school and they don't want to go back to school. So they'd rather pretend to be sick and need medicine. So when the economy, right, shows like it's healthy and it can withstand the Fed rate hikes, investors freak out because they suspect that the hikes will keep coming, or at least not stop. Type a Y in the chat if this makes sense, guys. This is my interpretation, but it's really helped me the past couple of years to realize this is not all pure logic and economics. It's emotion and anticipation of things. So good news about, hey, inflation's coming down can be bad news for the market, okay? All right, so with that, let's keep going here. And everything I'm saying here is being recorded. So anything you guys miss, you'll be able to catch in the recording. We'll let you know when we're going to post that, okay? I want to make sure I make the most of the time and not go back and review things that you can capture after. So there's my take on the SPY. So now there was a question about specific levels. So let's go to the intraday chart for this one. And this whole area here, so 393.45 intraday high, which is reinforced by this level that was already violated. 393.16, which is this little intraday high, which is also reinforced by this old bottom, even though we've kind of come and traded near it and technically it's been broken, guys. Can you see, this is important, guys, let me know if you follow this when I prompt you. The market fell, rallied, fell, and didn't just do it in one wave, but I'm just trying to make the point that it came back here and it bumped into this old bottom, it fell again. Type a Y if you see that. Okay, old bottom, came back. This is market psychology. This is plainly explained by whoever was long here, okay, and didn't get out of the way after all of this. This whole time they're like sweating, right? Like, oh God, how much more loss am I going to take? Whether it's some sort of direct application or an options trade or whatever. So when the market comes back and gives that second chance to get at or close to break even, these buyers from back here are like, they breathe, they exit, and then you get that fell swoop again. Now, whether this turns into a new drive lower or not is yet to be seen. But can you guys see how all of these patterns, like that's just one pattern, it all ties to real human behavior, okay? Like the market doesn't have a memory, but people have memories. People, you can bet people remember what the last financial crisis was like, and they will behave now in a similar fashion, okay? All right, cool. So I've spent a lot of time on like the psychology here, but I think that was important. Guys, type in the chat if any nugget of that stood out to you. I would like to know which piece stood out. I know I said a lot of theory and stuff there, and you can revisit in the recording, but If they have a takeaway that you had, a little golden nugget, let me know in the chat. Okay, you can type it or you can type a Y. But now we're going to go back and we're going to move along to a couple other tickers and keep getting you guys the help here. Okay. Deb says spoiled children. Okay, yes. Psychology, people, not market. Yeah, I mean, the market is made up of participants. Now, we are technically the small ones, okay? The institutions are really what's driving a lot of this action. But even institutions have their notions of what they want to see. Okay, so FTI is the next question we'll move along from. So again, with the SPY, guys, just to be real clear, I still don't know what's going to happen here yet. If you would like to know what I think is happening with S&P markets at any given time, the greatest place for you to do that is in my skinny on the mini reports that I do on the E-mini S&P, which many of my students translate over to other markets. So who's here that has the skinny? Type an S for me in the chat. Some of you have had it for years. Some of you have had it for days. Some of you had it for weeks. Okay. And I can tell you that there is so much value in there. And I'm not saying that because I'm worrying about you like buying my report. I really am not. It's the same work for me, whether you come and get it or not. In fact, it's more work for my team, the more students we have in our systems. Think about it, right? When I used to have like a couple hundred traders that were getting my courses and stuff, it was very simple. It's become thousands now. It's a lot more complex. It's more work, actually. The thing is, I know it's where you're going to have the most difference for the smallest investment, not of your time and energy. You're going to have to study and learn, but of your dollars and cents. So that is why I talk about the skinny, and that is why I value it. And that's why it's my baby. So if you want to follow my day-to-day market fluctuations, the skinny is where it's at, and you can check that out. So let's keep moving here, though. I want to answer these couple questions and maybe do one more broad kind of check on how you guys are doing. So guys, since it's 5:24, I will ask you, and I will honor it. Let's do one more round. If you have a question that you've wanted to ask that I have not answered yet, or Anna hasn't answered, now is your time to enter it. Okay. And while you do that, I'm going to take an eyeball stretch because I know I said 60 minutes, but I'm feeling generous here. So we're going to keep going if you guys have questions. If you don't, we'll wrap up. So I'm going to just stretch real quick and you guys can stretch with me. So what I normally do when I stretch, I don't know if I have it available. Yes. So I'll bring it over. I have this little 1-minute timer that is just like the cute timer. Okay. So check it out. See, this is the little 1-minute guy. This is the little baby brother or sister to this. Okay. So this guy is on 25 minutes. And when it counts down, I take a break or I give myself an extra 5-minute bonus if I'm really in the middle of something, like typing an email or in the middle of a trade. I will never stop and stretch in the middle of a trade unless I have everything set on it managed and I'm standing right here. Okay. Just warning you, this is not like a get up and leave the room thing. So here's the 1 minute. So I'm going to set the 1-minute timer and we'll all take a quick 1-minute break together. So again, those of you who maybe missed this earlier, gently stand up if you're sitting, get your blood moving, no shoulder rolls, little like arm wiggle, whatever works for you. I'm going to stand up and I'm just going to get a swig of water because I haven't in a while. Then look at something far away. That's the most important part here. So I'll sit back down. And for this part, I take off my little screen glasses and I have a convenient little window out. And I just look out and I see my neighbor's window. I see trees. I see other things, but I just want to look far. That's what refocuses your eyes. And this is what prevents you from having that buildup of like computer strain. So people always are asking me like, how are you able to do so much stuff? And I'm like, because I've kind of trained my endurance and I'm not, there we go. There's the break timer is done. She's a little louder than the other one. But anyway, it's a training of endurance. And guess what, guys? The days I don't listen to my cue, I suffer. My eyes hurt. I get tired faster. And this is not so that I can work 14 hours. This is just so that I can do what I need to do. Okay. How are you guys doing? Would you like to go for a little longer if I'm here to help you? Or y'all want to wrap up in 3 minutes? You good to go? Yes? Okay. Let's keep doing it then. So I see more questions that have come in. So again, I'm going to call your name if I got your question. And I'm going to continue the ones that I missed. I didn't forget about you, Bill. Okay. So I'm going to bring in the questions that came from Mark about FUTU. Thank you. She says, I love your daily screen report, especially the ES since I day trade ES. Awesome. Okay. CF asked about INTC. Deb about AMD. Okay. Oliver, MU. Okay. Great. So I'm going to continue with these here, SPY, FTI, H, and then we're going to do FUTU, INTC. So CF, you gave me 2 tickers, but I'll just do one and I'll come back around. Okay. And then you. All right. All right. FTI. Did I do FTI? No, I did not. Okay. So Rich, FTI. Okay. So Rich said, is the channel since July, August, past 3 days finally broken? Well, let's see. I'm not exactly sure what dates you used, but since you gave me July, August, I will approximate. So this was definitely the extreme low here in July. I don't see a low to connect in August, but I do see one we could connect in September. So all I'm doing is connecting, guys. If you want to follow along, ticker FTI, July 14th to September 26th, and then I'm just going to extend right. And I can see that that on its own naturally confirmed on September 29th and on January 4th. Okay, guys, this is how you should be using trend lines. None of this like best fitting, making it look beautiful and perfect. You want to be in the sequence of the price action. So there are choices in the sense that when you were drawing this here, okay, without having the benefit of hindsight, you could have connected this line to the second low here because it was a little double bottom. That's fair. And that would make your channel line even more sort of accurate. But at the time, you have to just stick to whatever you picked. So you have to either, if you drew it on September 26th, great, commit to it, marry it, okay? But if you drew it for September 29th, stick to it. It doesn't matter as long as you commit to your lines. So guys, type a Y in the chat if that makes sense, okay? Okay, Vishnu, I see you asking about the VIX relating to the SPY, but we can just look at the VIX to round things out as well. Okay. So now that that's there, Rich asked, is this finally broken? Well, it's broken based on this one day. Here's the thing. I'm not saying that it's not broken. I'm saying that when it comes to a trend line, I kind of like to see 2 sessions actually break below. Okay. I like to see that it's really kind of holding below that area. So this looks to me like it's going to stay broken, but I won't know until we have tomorrow's session, Rich. So there's that. Okay. Now, what you can do is identify the resistance levels that define what would be, you know, a false break here. So the first thing that I would look at is say, all right, we had a gap lower. So the gap that's here from 1351, if we get above that, it might be a sign that this was just a false breakout. That would be the first clue. You could also go intraday to see what was the most recent price high or swing high. You guys know what those words mean now, so I'm going to use them. Well, on the 60-minute chart, the most recent price high was here at 1428. So now those 2 levels, whether you look at them in the daily chart or the weekly chart, that's important resistance, and that's what I monitor. Does that help you out, Rich? Let me know. Okay, because I'm going to keep moving on to H. Oh, is Hyatt. Okay, I never knew that ticker Hyatt and Hima are both just a single H there. Okay, so the question from Bill about Hyatt is, he's short at 110. So we just throw a red line down there. And target is 100. So I'm going to draw a pink line for support at 100, just so we know it's your downside target by June 16th. Okay. Okay, Bill, first of all, you get 5 stars for how you positioned and frame your question, such that I'm going to paste this and copy it for everybody, okay? So everybody, this is very helpful to me. He gave me the ticker. He gave me his short entry position. He gave me the target. He gave me all that information, right? So I just want you guys to look at this as an example and keep that in mind anytime you're in a future session with me, that this is great. Now, he could have given me more details. I'm not saying more is not good. I'm just saying this is the basics, all right? Now, Bill, just confirm for me you meant ticker H, Hyatt, because sometimes symbols are different for different folks and I get confused, but I just want 100% sure. Okay, great. Especially when it's a singular letter, you never know. All right, so what do we see here going on with Hyatt? Well, it's been rallying higher since last summer. We had one nice big drive up here, then here, and this one broke into 3 pieces, making our way back down. And that move is looking like it's getting very close. This should not be dashed. To 103.50. That's this old top here from December 13th. So I would monitor this, Bill, that if you are short at 100 and you're looking for a journey back to you're short at 110, looking for a way back to 100, your biggest barrier, like support, is this old top currently. And it looks like it's also near some key retracement levels. So let's check these out. So anybody looking at me using a fib like this, okay, if you're newer, I don't use Fibonacci numbers. I use Gann eighths numbers. And that's something I talk about in various courses in my book, my Gann book and more. I was just looking to see if my book is handy. Oh no, she's up there, okay? But the book right here, you can see it. So let's see, 124, 126, 125, okay. So what I'm now doing is I'm going to add in a couple more retracement levels that are, again, the Gann eighths. I'm going to change the color on this so it's a little different pink, so everything kind of stands out. All right. So we're at the 50% hanging out, approaching 103.50. If we get below that, 100 could be in sight, but definitely 103.50 is the support to watch. Now, the resistance to watch in the meantime is this guy right here, 112.33, because it's the most recent price high. If the market gets above that, it might look like it wants to reverse higher. And yeah, that's all I'll say now. Okay, Bill, does that help you out? Okay, cool. Sometimes I say, okay, cool, before you answer. It's just more me like resetting and moving on to the next thing. Okay, so I have about like 7 more tickers that have come in. I'm feeling good. You guys are feeling good. My breaks are helping me. My water's helping me. So we'll go a little bit longer. Okay, we'll probably finish up by around 6. Okay. Now I'm going to address FUTU. I'm just going to go in order that everything came here. So this was from Mark, who was thinking of going long for target at 51.57. All right, so that's a relatively short-term trade. So what I see here, I'm gonna highlight something for you guys, and then I want you to answer the question, okay? So with me highlighting this and highlighting this, what is the current trend of this market? Uptrend, downtrend, or sideways? I kind of gave you a clue, but I just wanted to be clear. Okay, sideways, based on what I outlined. Now, we could go more granular than that, right? You could be like, well, this was an up move. We pulled back, and we're just sort of, going sideways within the context of this up move. Sure. The thing is, with this consolidation sideways, we've also seen, I just asked about it earlier, a little bit of bear zone domination, but we keep seeing these lows forming the bull support. So actually, never mind. Scratch that, okay? It's not full bear zone domination. It's a sideways trend. So here's my biggest clue to you in the current market environment to deal with sideways trends, okay? Again, I'm demonstrating tools I teach you elsewhere. If you want to learn them in full, that's up to you to go do. My price probes and spikes are my favorite for dealing with these zones, okay? So I teach this in 4 zones RSI, which is in the RSI power zone system. So what I'm doing, how I'm drawing it, why the colors are what they are, that's all explained in the course. But I want you to see what I'm doing here, and I'm going to add a little enhancer, a little frosting. So what I'm doing is I'm looking not only at the fixed ranges and saying, okay, well, this is the high of the range and this is the low of the range, okay? I'm looking at nearby levels that reinforce that if they are really there. So here you can see this gap reinforces it. So can you see how even if we trade above 56.56, guys, there's resistance here at 57.58? Type a Y in the chat. Okay, Mark, if you see that, please type a Y, because you have a trade idea for within this range, and that's fine. I mean, if that fits your risk reward and that's what you want to do, go for it. But the bigger picture is what I'm starting with, and then we can narrow in. So I'm like, okay, there's some serious resistance at this level. Now I can take my little tool and move it over to the next lower price spike. Wow, that was really helpful. We held the middle of the price spike from February 15th, my birthday, okay? Then we came and we formed this new high price spike, 51.66. So the middle of this 49.93 is likely to be resistance. So Mark, with a long target of 51.57, I think you'd have to watch out for some profit taking or raising your stop if you went long and things got to 49.93. So long as we're in this consolidation zone. Does that help you out? Yes, I see the potential maybe for it, but I think it's still kind of a little risky because now look at the bottom here, okay? This is the extreme price probe. We move it over to the most recent one that formed. That was tested and violated by a few cents here, 43.32 to 43, and then reformed. So technically, we formed a lower low most recently. So that's another reason why I'm hesitating to go long here. All right, cool. All right, home stretch, guys. I'm just moving along the list that we had. And whoop, okay, INTC, looking for going long. Okay, so Intel. Let's all get our bearings here. Let's do a little practice in multi-time frame analysis. How many of you use multiple time frames before you make your trade? Type a Y in the chat. You look at a higher time frame before you trade on a lower time frame, etc. Okay. How many of you have no idea what I'm talking about when I say that? Type a 1 in the chat. 1 just means new or level 1 or beginner. Okay. Nothing wrong with a 1. Okay. So when I say multi-time frame analysis, I'm referring to, even if you're a swing trader, say on the monthly chart, you're going out to you're a swing trader on a daily time frame, or a day trader, say on a 5-minute time frame. You go to something that's further out first to kind of get your bearings of what this market's doing. And even if you do it every day, guys, every freaking day, every day, I look at the weekly chart of the E-mini S&P first before I go trade it on a 15-second chart. So I go weekly, daily, 60-minute, 3-minute, 15-second. Doesn't necessarily mean I spend a lot of time there, but that's where I look first. It really helps kind of center you, okay? And I think that's part of why I make such uncanny calls in this market so often. Not every time, but quite often. All right, so if we come back to our chart here, on the monthly chart of Intel, we can see the whole, we can see decades here, right? So low in 2009, rally, we have the pandemic low right here, okay? It's lots of chop, but it still maintained a big picture uptrend. One last final push into spring of 2021, and then it's been down since. So I'm not sure why you would want to buy this now when it's tanked and it's deeply oversold. And I don't see any real close by price floor. So we came and broke this floor and we're dancing around it. So sure, that could hold, but it's not showing me it wants to yet. The next major floor after that on a monthly chart, CF, is this. 1923. So that's quite a percentage. That's 30% away from where we are now. Not 30%, sorry, 25 to 20. So it's about 20% away from where we are now. So now what we do for multi-time frame analysis, we got our big picture bearings in the monthly. We can go to the weekly. And now I can say, okay, well, on the weekly, this looks like a basing pattern. It's attempting to form some sort of accumulation range. I do not look at this as a bullish divergence, and let me explain why. I would prefer that if we're looking at this to this as a bull bear RSI face-off, bullish divergence in no man's land, I would prefer this low to be lower than this one, because otherwise this was just a sideways range. Do you see that, Bill? Does everybody see it? I'm really glad Bill brought that up, okay? You want to see bullish divergences happen in direct relationship to lower lows in price. If you don't, then what you're really betting on is something that's not a true continuation. This was a pause and then we're continuing. This could be bears just reasserting themselves. So that could get you in trouble, okay? So where we are now is, this is just more of a sideways range to me. I wouldn't do anything here unless and until we clear not only 31.34, but we also clear the bar high that was before that back here. Guys, this is a huge difference in how I look at consolidation versus many others. I know this because I studied for the CMT. I took it. I worked on a Wall Street desk with other technical analysts more than one time. Let me tell you, this is another little nugget you're getting here, okay? I'm going to take all these lines off and we're going to finish this out and move on to our last two tickers. This is very, very helpful for consolidations. Ready? Okay. So the market was trading down. Okay. So let's say you were just living through this. Okay. So we just make some nice fat bars, easy to read. Okay. Trading lower. At this point here, we're on the weekly chart. Okay. This is now a very recent price high. Does everybody see that? Type a Y in the chat. This is super important. 31.86 was the recent price high on Intel weekly chart. Okay. Now check this out. The next week we broke below, but that was still the key price high. Next week we broke below, but that was still the key price high. Okay. Then things started to consolidate. We got another price high here, it looks like. So 27.70 versus 27.84. Yep. So then you could have marked off this one. Then price started to look like it was going to turn around. But look, it stopped shy of the 31.86 and backed off. So while this looked like the beginning of a big recovery higher, it couldn't get through the next barrier. And that's what became the level that is captured in consolidation. You see? That's how I look at consolidation. I don't really look at the highs that are the obvious ones that are making it up. I look for what was the ceiling that existed before that has been, the pressure's been coming in every time it's been approached. So there's pressure here, there's pressure here, there was pressure here, and bears were coming in at even lower levels. That's a bearish indication to me. Now, I don't have a crystal ball, so I don't know if this is going to break to the downside, but I'm not super excited about it yet. And long answer CF, I would not recommend going long here because there's a lot of bearish pressure there. I would want to see a clearance above 31.86. And there's not a bullish divergence here because this low in price is after what was a higher low. There was a trendless environment here. You want to look at divergences in a trending environment, Kelly, right? If we had clean lower lows in price and then matching up with the trough. That's why it's in the advanced RSI power zones that I get into using RSI power zones in sideways situations because it's a little bit different. Okay, great. Guys, that alone, I cannot even tell you, when I started looking at consolidation that way, it completely changed my view. Okay. So let's keep going here. We have a couple more questions. This is a price high by my definition of price highs. If anybody is not sure of that, go to the beginning basic courses or anything I have, and you'll see high, high, lower high. Okay. All right, so let's, I didn't pick it out, guys. This formed as I did this exercise, I showed you, when you're coming down off of this price action, this is a price high. This is a price high. And this becomes a price high because it's an outside bar. The terms bar high, price high, swing high are all in your courses. I'm not going to reteach them again here. I just did a little while ago. So I'm telling you, you can watch back the recording and brush up on those. Okay. I am seeing the time now, and I want to make sure we get to everyone else's questions. So I'm going to move on to AMD. And for here, just go back to the daily chart for a moment. All right. So for AMD, the question was from Deb. And Deb, you didn't give me much context. All right, I'll give you a pass this time. But next time you ask me a question, you got to give me some meat to it. You got to give me some, what's your trade on? What's going on? So this is the monthly chart. We can do multi-time frame analysis again and start bigger picture. Okay, great. Deb says she bought at 88 today. All right. So long at 88. Let's just throw down a green line for that. And this is recovering out of the bull support power zone in a monthly time frame. It's been taking a little time to do it, but that's positive. Now on the monthly chart, if we come off of the high that is this on the chart, on the monthly time frame, I can see that this was a price high, right? High, higher high, lower high, because this is an outside bar. I can see that this became a price high, high, higher high, lower high on the bar. And so far, we're still beneath that 104.59, okay? As for support on the monthly chart, if we look at what's happening off of this most recent low, here we have a price low. And I'll move the labels to the left so we can see things more clearly. So this low here from October, low, lower low, higher low. And then we had a new price low here in January, low, lower low, higher low. So guys, if you ever are trading a stock, whether you're looking at one that's on your watch list or it's a new one you learn about for some, good fundamental reasons, whatever, I strongly recommend that you go to the weekly or the monthly time frame and pull levels from there first, because if it's important on the monthly, it's probably important on the weekly. And then if it's important on the weekly, it's probably important on the daily. Okay, so guys, type a Y in the chat if you follow that. Beginner pro tip, if you're getting into any new market, study the longer time frame. Even if you plan to day trade, I promise you, it will give you a comfort level, okay? So now we have these basic support and resistances for Deb. Now let's go to the weekly chart. We're going to keep those lines of analysis. We're not deleting them. Okay, so from what I see here, what you did was kind of do a breakout trade. Nothing wrong with that. It's just a different style. So a breakout trade, guys, is when you have a low to a high, the market corrects back, and then you start buying when it starts breaking above that recent high. The positives of this is that you're buying with the momentum of the market as it's resuming. The only potential downside is that it creates greater risk, because a logical stop, right, one based on the actual price action, not an amount of money, would have to go below this most recent low to keep you in the trade. Whereas if you bought anywhere on this pullback, you would have lower risk, but you would not have the assurance that the trend is fully resuming. Okay, so the breakout trade versus pullback trade, it is age-old question which to do, depends on your trading style and risk reward. So now if I add in what levels there are here, we have a new, on the weekly chart, low at 75.92. And compared to the one that we had on the monthly, do we have anything more recent? Not really. What we do see is that we can turn all of this into a range. So this is a price high that can now be studied for its entire range. I don't know what just happened. All right, so I'm going to make this blue. So blue is resistance, pink is support. All right. I want to make sure everyone's following me. I know that sometimes I'm saying go dig deeper elsewhere, guys, but it's because if I explained it once, I don't want to get into it too much again. And I want you to kind of keep with the bigger picture. So on a scale of 1 to 10, type how much you're with me here on this AMD analysis, just on this one chart. 1 is like, I have no idea what's going on. And that's completely fair. 1 or 2 is like, I have no clue. 5, 6, 7 is like, I'm getting it's in pieces. 8, 9, 10 is I'm with you, Hima. I'm following. Okay. Starting with a larger time frame, bringing it in, looking at the key levels on the larger time frame, bringing them down to the smaller time frame. And in our case, comparing them to Deb's long trade. Okay, cool. I'm seeing a lot of 7, 8s, 6s, couple. So those of you who put anything below 5, then definitely listen back to this. So far, knock on wood, the recording's processing and we will get it up for you tonight. And I'll let you know exactly where it's going to be. And then you can listen back to the things where I said you learned this. So pretty much every course I have now has a beginner lesson on the basics of price action. The winning price action playbook is like the most elementary one. Okay. I'm just going to put the name so it's clear. Winning price action playbook is like the basic elementary, like stepping stone number 1. And then you can build from there. Okay. So now let's go to the daily chart and round this out. So on the daily chart, are we seeing any additional information? Well, I see some forecasts we can do. I see some really nice forecasts we can do. And what I'm going to do, okay, so this fib here, I'm basically just taking the regular Fibonacci tool, right? And all I do is I unclick all of the other Fibonacci levels and I just keep 50%. I then personally have changed my defaults to be GAN 8s. So that's how that's looking and why that looks the way it does. But what I'm going to do is I'm going to adapt this annotation here away from the weekly to the daily. So I'm just going to readjust it to this daily candle to be more precise. So this is no longer a weekly price spike. This is a daily price spike. Please type a Y if you guys understand that. I've changed that annotation. It's now for the daily chart. Okay. Now we have a map. And I can bring in more analysis of what's going on recently, but really let's just focus in on the forecast we can draw. So one more pop quiz for you guys, okay? My forecasting students. 1, 2, 3, 4, 5, 6. Which of these would you use to draw a forecast to help Deb manage her trade? So the tribe helping the tribe. Let me know in the chat, please. There's always 3 data points when you are drawing forecasts. If your answer is only 2, then you're missing something in explaining it to me, okay? But this is the one I would focus on. Woo, look how beautifully that coincides with our weekly resistance. And now it gives a time to it. March 20th. Now, are we going to race up there by March 20th? That's not guaranteed, but that's the forecast we can look at. And this is a little bit of a longer forecast in cycle length. So it's a little bit more useful for broad analysis, not just direct trading. So Deb, does this help you out? I think this was a great lesson for everyone here. It was a wonderful way, I think, to kind of start wrapping us up. But I will look at a couple more tickers. And awesome. I'm glad you guys got value out of it. Okay. Okay. Now my energy is waning, but that's okay. I said we'd do another maybe 20, 30 minutes, and that's where we're at. So let's come to Micron for Oliver. Oliver, how are you? I think we spoke once and you had a lot of energy and passion for your trading, which I appreciated. So I remember that. So Oliver says, Micron, he's long, he bought at 64 and he wants to look at the daily and 1-hour charts. Okay. So first I'm going to throw the trade down with a line. Guys, if you don't already do this, I highly recommend that when you make a trade, you either turn on the features on your platform to show you on the chart where you enter the trade. Okay. TradeStation has something called chart trading that would do that. So if I was long Micron myself in my platform and turn on chart trading, it would draw a little bullish arrow here. If not, all you can do is pick a green line for a long and a red line for a short and literally plot when it happened. So Oliver, I don't know when you made this trade. I mean, obviously I can guesstimate because it was either here or here or here. Okay. But let's just say you made the trade most recently in January. What I would like to do, and I do this with my coaching students. Those of you who had one-on-one coaching with me, you know this. We put everything on your charts. I have an actual workspace I dedicate to those students to show and map all their trades so we can maintain them together. We have been coming off of this high here. Oh, sorry, bought it 54.64. Okay, that's a whole other conversation. So thank you for that information. Great. Okay, so it looks like you bought recently at this level and you're looking for it to go long. Or sorry, you're looking for, where it's headed from here. Okay, so I'm going to now do a faster paced version real quick of the multi-time frame analysis again. Would that be helpful to everybody? Type 1 in the chat. Like what I did for AMD, but I just dial up the speed. Okay, so I'm not going to explain every single thing I'm doing. I'm just going to do it. All right, here we go. Okay, this second low was lower, 48.43. Okay, so I've mapped out the key levels to me on the monthly. Again, like I said, I'm not going to explain every single one. I'm just doing it. We're lifting from bull support. So far, this could be reaccumulation. We shall see. Weekly chart. Again, I just changed the time frame. I didn't make a new chart. Okay, I'm not going to use that tool. I'm going to use my that's not telling me anything. I'm going to get more into the recent action. So this bar, the red-bodied one, has a lower low than the green-bodied one. So the middle of that is important to me, 50.36. So while above 52.29, I think the chances of recovering higher are decent. The most recent price high and its barriers on the weekly chart are laid out here. And now I'll take this to the daily. So reinforcing this weekly range low, the price high low is 58.65, which is an actual traded high from March 6th. Reinforcing this weekly range low. Okay, so in this case, I'm not adjusting the price probes and spikes away from the weekly. I'm just keeping them. Here we have this entire gap. So the the low of the gap and the high of the gap, the pre-gap high. So those are additional levels. And now I'm going to just make a copy of this tool because I want to anchor it to this recent price high. Now I have labeled all the support and resistance that I think I'd be watching if I was trading this. So Oliver, you can translate these over, okay? So from your long at 54.64, if we fall out of bed and get below 52.73 or 52.34, I would watch out for weakness into 50.96 to 50.41. But if this actually continues to have legs and start to resume higher, 56.54 is the first barrier, which is actually very close to 56.51, this bar high from March 10th. Then 57.60, then there's a lot of energy that might be selling around $58, $59 called. Does that make sense, guys? Type one in the chat. Do you see how I put the levels? It's like putting the bones of the house down, okay? And then you bring in the walls and everything else. It's like you just keep layering it and the clusters of support resistance will jump out to you. All right, terrific. Well, I think we're almost there. Yeah, we're done. I'm done. Energy-wise, I feel good. I'm glad we went as long as we did, but I think I'm kind of tapped out now. So I will leave the floor open, though, for us to do some wrap up here, okay? We got through a lot. We're going to look at the VIX as a final wrap up because Shaker had a question about the VIX, and that's a good place to leave. A little scary place, but a good place to leave. So this is a clean chart of the VIX, and I'm going to, again, really fast, not because you should do it fast, but just because I want to respect our time. I'm going to kind of come through and look at the VIX. So in the monthly time frame, it's very messy looking, okay? But you can see we're clearly higher off of the February low. Weekly, yep, still building higher, but coming into this past doji. That's potential resistance that might help keep the market, the S&P, stable. In the daily, on the daily, this is this big bad boy right here. And we touched the end of that and backed off. See, so there is room for the VIX to kind of weaken from here, but it's not clear to me yet what it wants to do. Okay, that's all I have to say about the VIX right now. It's kind of in the indecision zones, just like the broad markets are. Okay, awesome. Well, thank you all for spending this time with me. I hope you found it valuable. I'm going to stay and answer a couple of these broader questions you're having. I just want to be really clear about what we're going to do here in terms of where we're sharing this, okay? So I am recording. It's been recording the whole time. What I'll probably do is let it process and just edit out some of the beginning sort of empty screen stuff. And then we will load it up to the portal. And when I say we will load up to the portal, I'm going to put it in the tribe portal. So Anna, if you can get a head start for me, that would be cool. What we'd like to do, actually, never mind. No need, Anna. I'm just going to put it here in the helpful Hima section. Okay. So when you go to the main HimaReddy.com/portal, you scroll all the way down and you go to HimaReddy Trading Tribe. That will bring you here, and this will be your homepage. And what we'll do here is just over in helpful Hima, because it already exists. Right on this top deck here, I'm going to drop this video. Okay. So you can put it in, see, you can just hit play from there when it's ready. Awesome. And for those of you who would like to be here in monthly group coaching more often, who aren't already a member of a HimaReddy course, here are the dates that you can look at that we're planning for now. Here's a caveat. April 5th, we're going to make probably April 12th. Why? Because of 3 important letters. Mom. I'm visiting my mom in the beginning of April. And I think that I would like to really maximize time with her, especially now that, COVID's clear for the most part. We can go enjoy other parts of Long Island and New York City. And so I'm going to make an exception for my mom. I think that's fair. You guys cool with that for mom time? Okay. And so April, we'll have the session on the 12th. If that needs to change, we'll let you know right away. But the rest of these, I don't have travel as of now that conflicts. When you see me look all the way here, I have a big old wall calendar. Like, I'm a very analog person. Even though we're all digital in this world, I really do run my life by a lot of paper things. So I have a planner for all of my, appointments for the week. I have a daily journal. This is the same journal that I use with students for their goal setting. I have a big old paper wall calendar. But yeah, we're going to put the recording in the Tribe portal. And if you want to be part of this going forward, because this was just a bonus one-off session, because like I said, my spidey sense was everybody needs me, whether they have a course or not. I want to give you this time. I have no other presentation here. I don't have a specific product to give you. You know what I have, it's out there. Also, Anna's here and you can ask her questions for the next little bit. But keep an eye on your email for any time we have any special offers or things going on, if you want to get deeper into different parts of your education. And those of you who are newer here, sometimes I do this. Would it be helpful if I went to the portal and kind of just showed you what we have? I don't mind doing that. And I can explain what's what. Okay, it's a good refresher for those of you who are also still in the tribe. So if you want to hang back, I will do that here. And I'll keep it really big picture. Okay. So when you go to HimaReddy.com/portal, these are all your choices. Okay. So the skinny of markets is the portal where I store the reports. Like I said, that I do the E-mini S&P, the NASDAQ, stock picks, and I email those notifications out to those members. Right now, we're in a holding pattern with Futures Trading Lab and Swing Trading Lab. They're very intensive on me because it's like me meeting with you guys regularly. So I will let you know if I reopen those and do those again. However, there is training in those, my toolboxes that are really cool for those of you who are trying to like build your own trading plan. And some of you have access to that. So if you have access to those, is anybody here a toolbox owner? Type a T for toolbox in the chat. Okay. If you have access to that, you're still able to go in the portal and use that. It's just that the full lab isn't running as a full curriculum. Okay. Now, this is what I was talking about a lot today when I mentioned the Bull Bear ebook. So you can print it out, but this is the Bull Bear RSI face off. Okay. And it is in this portal right here, RSI Power Zone System. So I'll just make this easier to see. And when you go in there, depending on your access level, it tells you what you can grab. So there's the Winning RSI Playbook, Bull Bear ebook. These are just things that can get you started that you can use. Again, I want you to practice. I don't want you to just jump in there and do a bunch of stuff. Okay. I want you to paper trade before you go live. And then the 4 zones RSI cover system is like the starting course we recommend if you want to get in with me to be able to come to monthly group coaching. You have the RSI Power Zones indicator in there and more. So if you have no idea where to start, Anna will probably tell you that this is the place. Okay. So like I said, I'm just going to do like a quick overview here. So loss forecasting and trading patterns. These are courses that are loss forecasting is about forecasting my specific techniques. These are not GAN based. It's a completely separate approach, but it works really well with other GAN stuff. And then GAN trading patterns. That's my take on GAN's trading patterns. There's also a really cool calculator that's in there that like, until now, I never even talked about the fact that it's part of that. So that adds a whole level to it. That's going to be really useful to me as I analyze current markets, and I'll let you guys know more of what I'm using there. Then we get to the a little more advanced row. So we did this on purpose to kind of break them up. So the orange is for advanced, okay? Advanced RSI Power Zone System, when you want to go to the next level with the RSI Power Zones. Advanced loss forecasting speaks for itself. And the skinny markets outlook is going to be set aside. It's going to be, it's a big project for me. And I've decided that I want my time back in that sense. It takes me 10 to 12 hours to write these reports every quarter. So I'm going to be sunsetting that soon. No worries. If you have reports, you will always keep your copy that you have. But it might still be on the portal. But I'm just letting you know, you know, this is just there for people who've had previous access. I'm moving forward from it. Okay. RSI Power Zones indicator. This is for those of you who are very insistent that you just want the indicator because you do. And so we have that available now separately. If you already have 4 zones RSI, you don't need this. It would be redundant. Okay. This portal is for my mentorship students, but really they do a lot more work with me one-on-one in their individual shared folders. There's just some coaching resources there. And GAN Candlesticks is another GAN course that's focused more on candlesticks patterns and what I call my nano twist on them. And then last but not least is my little baby, my book, The Trading Methods of WD GAN. And in this portal are bonuses. I've also just updated this portal this week, just updated the directives here to make it more clear. So this has a couple ebooks that you could get that are, one could argue these are like the precursor chapters to my book that kind of make it even more beginner friendly. So it's Winning Price Action Playbook, Missing Trend Strategy. And then here are the bonuses that you can come and download when you have the physical book. Who recently ordered the book? Type a 1 in the chat for me if you recently ordered the GAN book for me, the physical book you're waiting for. This guy. Okay, this is my baby. My first baby is up there right here. Okay, that's the one I published with Financial Times Press. And this is the one that you'll be getting. So it's a beautiful printed on cover like this, like big old book with plenty of little margin space for you to take notes and stuff. And I referenced my own book quite a bit. So I'm going to probably start trying to reread that this spring. So those are the HimaReddy products and overview. If you have questions, you can send them to Anna at support at HimaReddy, and she'll help you after the session because we want to wrap up here soon. So if you want any of these digital books, again, you can just reach out to Anna at support. Oh, there is no PDF version of this. I do that on purpose to protect my knowledge. I am working on, excuse me, I'm working on a Kindle version. I'm working on it. I'm working on an Audible version, working on it. Don't hold me to the timeline, just keep you, well, you know, but if you ordered this book, physically it's coming to you and you can get started with the bonuses as well. Okay. Okay, so cool. I will take one last look if there's any other questions. Otherwise, we'll wrap up here. We'll let this recording process and let you all on your way. So if you guys could one more time, even if you shared it already, because we'll save the chat, but I would love to see at the end here as you leave, I would appreciate it since I spent almost 2 hours here with you. What takeaways did you have? What was a useful golden nugget or anything like that? And now you know that this is what monthly group coaching, this is a taste of that. So if you want to join me for those sessions in the future, you can as a member. Okay, so Oliver says, always start with the higher time frames. Yes, we did that quite a bit with the AMD and the, oops, where am I going? With the AMD and the Micron, we definitely did that. That helps you kind of really get a clear look at the market and, you know, what are the more significant levels versus just what's on the daily or intraday charts. Okay, I'm going to scroll back because I know you guys are tired now. We did a lot today. Squeezed a lot out of this session. So I'm seeing some of the other ones you guys gave me earlier. Okay, the reminder about the divergences in the bull bear, yes. Okay, logic for picking key support and resistance, SCF, cool. Finding support and resistance levels, advanced look at divergences. I think that's what you mean, Stephen, not divergent, but divergence. So that's cool. Okay, awesome. Well, I appreciate it, guys. So I hope you have a great rest of your evening. Again, these are the dates for our future official monthly group coaching live sessions. If you want to capture them, the only caveat being this is going to be, like I said, April 12th for mom. So we'll say 12th because Hima is going to be in NY. Yay. Okay. That's kind of messy writing there, but cool. Okay, lots of great information. Thank you. You're welcome, Roberto. Using the fib tool for support and resistance, says Oliver. Multiple time frames, says Johnny. Okay, awesome. Looks like the multiple time frames and the determining the support resistance was one of the bigger takeaways. So I'm glad I went through that in depth. Okay, as promised, we are recording. I have not even touched this to pause or anything. So what I will do is let this process. And once that raw file is ready, we'll just cut out some of that beginner filler stuff so it gets right to it. And we're going to make this as a big old video and put it in your tribe portal. Okay, so we'll email when it's ready and you guys can check it out. So thanks again. Thanks for your support. I'm here for you. I know these are wild times. I know it's not super easy to trade. It's not easy for me in these situations either. I'm being strategic. I'm just being thoughtful, and we will find opportunities together. Have a great night, everyone. Take care. Bye-bye.